And you do not, we talk, as we're gonna be talking for like 90 minutes. There are a ton of seats
Grab
up
a
here.
seat.
Please grab a seat. I don't want anyone to have to stand through all of this.
Your feet will hurt.
Yeah. Don't get influenced by the cool kids. It will get long. We've learned that. All right. So, show me the money. Today we are talking about where to find the money and how to become the bank. Welcome to Grid Knoxville, our April edition. So, you ready to go, Cory?
That's right.
Let's do this thing.
Yeah, absolutely.
Ooh, who's got a win? Who's got a win they want to share with the room? Who's willing to be vulnerable? Talking about leadership here. Lisa, yes. What's a win?
I closed 3 deals last week.
Hey.
Lisa closed 3 deals last week. Let's go. Let's go.
And I have a potential, so those that are looking to invest, a really, really cool building not on the market yet in the Burlington Village area that could be a great space for a developer.
Is this the one we've seen? That one?
No, the one I wanted to do the event in.
Ooh. So if you don't know where Burlington is, that part of East Knoxville where you almost get, it's where the old racetrack used to be. My old racetrack, I mean, before any of us were alive, right? It's when right before you get to,
It's right before the split, or like.
with a split, yeah, where you get to like Kroger and 640 comes back in. So Burlington has some really, really cool commercial buildings over there. Like we just sold a property in Oakland. Yeah, that area is really up and coming. I like it a lot.
Leases that are going online pretty soon, right in that same spot. And if anybody's looking to buy businesses, I've got 3 for sale.
Okay, I love it. Great commercial. I saw another hand go up. Who's gonna win?
Zach raised his hand.
I did raise my hand.
You did.
Let's go,
I saw
Zach.
you, Zach.
It's kind of a win and a loss at the same time. Both my businesses lost money last year, so I got a very sizable tax return.
That is a glass half full man right
That's
there.
right,
He's
absolutely.
indomitable. I love it. I love it. Hashtag winning. That's some Jocko Willink good.
Yeah.
I love it. That's fantastic. All right. Cory, you got to win?
Yeah, I do. So I've got I set a goal this year to complete 4 flips. My second of the year goes up for sale tomorrow morning, so it's cool. And last week I put under contract what'll be my third, so I'm right on pace for my goal this year, which is really cool.
What are the stats, Cory, if you tell someone else your goal and then if you write your goals down? Remember those?
Oh, God.
Like how much more likely you are to succeed?
It's a significant.
I think if you write them down, you're over 60% more likely
Yeah,
to
it's more
succeed.
than
If you tell another person, you're more likely to succeed. So share your goals. We talk to a lot of new people that come in here, and it is often interesting when I meet brand new people how often they're eager to diminish themselves for me. Hey, no, I'm not a big deal. I'm brand new. I don't know what I'm doing. You know what I mean? I don't. We just have mics. You don't even know our bona fides probably unless you looked us up on social media.
Well,
We know a couple things, but no. So share those goals. Tell people what you're trying to accomplish, like your wildly audacious thing you want to do in 5 years. People that have really clearly defined goals are so much easier to help. Like when someone has something very specific they want to accomplish, it's so much easier to help that person.
Yeah, for sure. Well, that's why we ask you, right? Like, who do you want to meet today? And some people will say, well, I don't really know. I'm just here to kind of meet people, or I'm just here to kind of learn, which is awesome.
Yep.
And if you clearly define, say, hey, I'm really looking for a contractor that does X. Hey, I'm really looking for somebody, I've got a project, I've got a good deal, I'm looking for some private capital. Maybe I have a private money lender, but I need somebody who's open to come in as a joint venture partner. It's specific, you can remember that, and it's easier to play connector in this room. That's what we're all here to do, right, is be a community and help out and play connectors.
I love that. Yeah. So, Cory, who are you?
Sure.
Why do you run this group?
Sure. So my name is Cory King. I am a real estate agent and investor, the managing partner for the Cause Group, which is a real estate sales team here that specializes in residential and small multifamily real estate. I've been an investor now since 2009, where my journey began really just buying my first house as a house hack, aka roommates. Really, before that was really a term of house hacking. That put me on the journey to understand real estate and dive into it. So fast forward, house hacked, sold that property. That's what allowed me to move here, jump into the business full time. I've been in sales now for 6 years and been able to I guess build a pretty decent little portfolio, retire the wife, get her where she can stay at home and just kind of be with the kids, which is awesome. Like that was really the first mission, was to get that part square. And we started, what, 4 years ago? Almost 4 years ago.
Yeah, it'll be 4 years in June.
Yep.
It'll be 4 years in June. So, and Cory's been able to replace his expenses with passive income, right? That's one of the great definitions of wealth I heard is when you have enough passive income to fund your lifestyle, right? And so when we're talking about where to find the money and what we're doing with this money, one of the biggest things is getting clear on, where do I want to be financially? Like, what's my burn rate, right? Having some clarity on that. What do I have in terms of savings? Have I earned the right to invest? Those are all some interesting questions to have when we're talking about the money side of things. My name is Justin Myers. I am a realtor. I run Casa with Cory. And then I am, I guess at this point, a professional connector. So I travel around for Grid, around the country, opening up other grids and identifying other communities. Grid is in 10 states around the country. If you know anybody that I should know that's kind of passionate about community, I'd love to talk to them. If you think this is cool and you want to see it wherever you came from, if they could benefit from it, holler at me. We just opened up Grid St. Pete. What was that, like 2 weeks ago?
2 weeks ago.
I guess it was 2 weeks ago, yeah.
Raleigh.
Opened up Grid St. Pete 2 weeks ago, Grid Williamsburg in the last month, Grid Raleigh, North Carolina in the last month. And we've got Austin coming up, and I think Lubbock, Texas, and
That's cool.
yeah, one in Virginia and another one, Charleston.
Cool.
Charleston, we just got an application for Charleston. So you can connect with us, Grid Knoxville. If you just search that on any platform, you're going to find us. Our website, Instagram, we got a Facebook group. We'd love to connect with you. If you're new and you don't know what you're doing, come talk to us. We will happily consult with you and help put you on a track, because the reason we run this group, if you are new, we want to educate you until you actually know what's going on, so then we can invest with you. And if you're in here and you're very seasoned and you're doing a lot of deals, we want to do some deals together. Let's partner on some stuff. Let's send us some stuff. Maybe we got a buyer for you. That is why we're running the group.
That's right.
Yes. All right, so thank you to our sponsors. We got some of our sponsors going to be joining us later today. Is Morgan in the room? Is Morgan out front? Morgan, come on up here, buddy. Morgan and JT. I don't know if anyone else is here from Foundation. We are in Foundation Mortgage's office, this beautiful space. Morgan, jump up here. Tell these people what y'all can do, how you can help them find some money.
Absolutely, I'm Morgan Hardy. We are a mortgage brokerage, which means we've got about 75 different partners that we work with, and we replace the normal salesperson at any normal lender around here. We do a super wide variety of things. That's why we have such a wide net. We can do fix and flip loans. We can do, but we don't do those on nearly a high level as Chris and Flint do back there. We also do debt service coverage ratio loans. We do just regular loans for home buying. That's the bulk of what we do, and we do that at an extremely high level. But that's what we got.
We appreciate you.
Thanks, Morgan.
One of the reasons we have a conventional mortgage company, like a regular mortgage company in here, is because along this journey, many of the deals you do, you're going to be refinancing out of that deal, or you're buying a primary, or you're buying another primary and turning your primary into a rental, involve regular financing. Like, that's definitely not something to overlook. Like, there's some pretty attractive terms. We're going to talk about it today. We've got a couple other sponsors. We're going to talk about choice and warranty. How we leverage them. I think it's a good.
Man, absolutely, yeah. So
You should all be doing this, actually. Yeah.
Truly, yeah. So Choice Home Warranty would be like a warranty package you can buy for your home. That I look at them as essentially like the insurance for the things that your home insurance wouldn't normally cover. So water heater goes out suddenly, shower leak pops up, right? Appliance dies. These are great.
AC.
AC unit for
Yeah,
sure.
yeah.
Absolutely. Small leaks. For the cost of them, a couple $100 a year. Certainly can save you like a lot of headaches. This is a nice little leverage tool if you are an investor and you want to have these on your rental properties, rather than having to freak out at the last minute because the water heater broke. You can reach out, file a service claim. It's like $80.
It's less than $100 for
Yeah.
a service call, and for $660 a year, you can get more if you have multiple years. You can get AC coverage. Highly recommend if you're buying older homes. The other thing you can do if you're working with an agent that they could be doing is they can put this on your listing when you're going to sell property for free, and you don't have to buy the thing unless you use it. So if you're listing any property, you should be putting a home warranty on it. There's literally zero downside. So there's your free tip, since Marianne Can't usually make it in the evenings. So we've got Approach Lending. You're going to see Kristen Flint later. And we've got Jacob Lay Property Management as a sponsor. If you need advice on rentals, I literally have no idea how to estimate rents because I've watched Kristen build that portfolio to 1,000 units, and that is my secret weapon. I just ask her what stuff's going to rent for. I don't go online on some rental website. I just ask her because she has her finger on the pulse. So I think she's excellent. Cool.
That's right.
Yes. Choice is national, and the rep we have here is like their best rep in the country. She used to be, she's pretty awesome. She's done some stuff for me that's been pretty incredible on some deals. So, all right, who's got money today? Anybody got money to lend? I see Morgan has some money. Anybody have some private money?
Chris Flint, who's wearing
Flint has
green
money.
name
Chris
tag.
does not have money today. Dan has money. Cliff's got some money. Anyone else got some capital to invest in a project? Okay, I see Wayne back there does. Awesome. Who else, Cory?
Cool, yeah. Who's a contractor in the room? Contractor, handyman, you provide some kind of service, insurance agents, right? Real estate agents.
Zach does demolition. He wants everyone to know very well. And he does haul away services as well and dumpsters, but he does demolition. Who else is? We got a couple other contractors. Raise your hands. Some servicers, lawn care companies. Yep. Glad you're here.
Cool.
Who's got a deal today? Who's got a deal that somebody should buy? Anybody come here with a deal to shop? I've got a deal. Anybody on our team, please
Nathan.
raise your hands. Hi, are we? Thank you.
Good job, we.
We got some. Duke's got a deal. Duke always has deals. Fantastic. Who's a service provider? We have any accountants in the room? Any insurance agents? Any bookkeepers? Anything like that? Jesse in the back runs a bookkeeping service for investors. Yeah. Do we have any realtors in the room? Awesome.
Couple.
Yeah.
Cool.
Love that. Realtors are a great source of information.
Yeah.
Like leverage realtors. You
Yeah.
should have a relationship with a realtor. And if you find the right realtor, they can feed you a lot of business.
I was going to say, I mean, my flip I have coming on the market tomorrow came from a realtor in the room. Pretty powerful. Just kind of brought it to me today.
Any,
It was not. No. If funny, a good question, but no. Just another agent who was in the room who had some clients that inherited a property, right, and didn't want to go put it out on the market. Said, hey, can work out a deal.
I've got a question. Who only buys off-market deals? Anybody only buy
Only
off-market deals?
off-market.
Anybody buy stuff off the MLS? The MLS is the greatest source for business. It's amazing. You know who convinced me of this? This guy, Kevin Kohler, who's running Grid in Fort Lauderdale. Kevin, there's over 80,000 agents in Miami-Dade, Broward, and that guy pulls commercial deals off of the MLS on a consistent basis and sells them. Like, there are deals on there. They're just not always presented well. Like,
Yeah.
I love a poorly presented deal on the
Yeah.
MLS
Yeah,
all
true.
day long. Awesome. Cool. Cory, giveaways.
Cool. Yes, we'll do a couple. We got a couple giveaways to do. Who thinks they traveled the furthest to get here today? We've had some folks from I think, Italy in the past. That was pretty wild.
Scott,
You
where'd
know,
you?
I've been trying to come. My wife let me out, so like I feel like I went the first.
Emotionally, Scott has traveled.
Come on now, put in the work.
How many? What'd you have to trade here? You going to like Easter at the in-laws? Like,
Figure it out when I get home.
all right. So that's not that. Don't ask Scott for tips on how to negotiate, but he can't give you money. I love it. I love it. Who else traveled the furthest? Maybe it's Scott traveling.
We got a Georgia right here.
Yeah.
I have a Florida license if you want to go that route.
I mean, we're both Florida boys.
Today, yeah.
Today, we did have someone that came like literally from Italy. He was in
Italy,
town
yeah,
visiting
that's pretty
somebody. It
wild.
was nuts. Where in Georgia?
Just north of Atlanta.
Okay.
Okay.
All right.
All right. Anybody travel further than north of
travel-
Atlanta?
No?
Heard.
Fantastic. We got a copy
win.
of Lend to Live. This is the Bigger Pockets book on private lending. Sean, glad you're here today. Yeah,
Totally.
appreciate you having you here. Where are the other two, Cory? Where are they hiding?
Yeah, they're up on the top of that shelf there.
Vern, can you grab? There's two other books back there. All right, cool. Who did their first deal in the last 60 days? Anybody buy something in the last 60 days?
That's 30 days. Way at the back. Was it at the back? Sorry.
Anna and Cliff are debating. I'm just letting them work this out. I'm not kidding.
She just wants to win stuff.
I love it. I love it. Well, tag us on social, Anna, and we'll pick you. So go on social, tag Grid Knoxville. We'll do one there. Anybody do their first deal in the first 60 days? Agent, lender, anybody buy something?
I hit a reset button on my fix and flip today, so it's like I bought it for the first time.
I love it. Who's in the back? I saw someone raise their hand.
Yeah.
Yeah? All right, come on over, Dustin. That's awesome, man. Tell us what you did. That's killer, man. Glad you're here.
Finally got my first flip. So.
You got your first flip.
And then 2, 3, and 4 came right behind it. So.
Bro, tell us
No
how
big
you
deal.
found that.
Good
He's
stuff,
got
man.
4 flips.
That's awesome. Yeah.
Yes.
The first one came off kind of my mentor, Steve,
Mm-hmm.
and he hooked me up with Zach Tetley on that one. And then another one was off like Union County Speaks. It's just like a Union County, I don't know, like a local Facebook page, you know?
Yep.
And then the third one came from ProSource. And then the fourth one, it was me wholesaling, trying to find it, and I'm like, I'm keeping this one for myself.
Cool.
So,
Okay.
yeah.
I love that, dude.
Good move.
Congratulations.
Nice job,
That's great,
Dustin.
Dustin.
I've also got a deal where I've got a great package out.
So Dustin's got a deal. Come find Dustin after. Thank you for coming up, Dustin. Dustin's got deals. Apparently, he is good at finding all the deals.
Yeah.
All right. Important legal stuff.
Yep.
All right. Repeat after me on the count of 3. 1, 2, 3. Don't sue us. Thank you. All right. So, important disclaimer: the state of Tennessee wants you to know that we are not tax professionals. We're not attorneys. We're not appraisers. We're not surveyors. We're not experts on flood zones. Right? And all of this information, use at your own risk. Run it by your trusted board of advisors. Do not invest money that you cannot afford to lose or you cannot afford to have tied up. That is a very quick route, right, to go down. Often I talk to people in here and they want to learn how to invest, but what they really want to do is learn how to make money. But it's a cash machine they're talking about building, not a wealth machine, and that's totally okay, but just come talk to us. There's a difference between the two, right, Cory?
That's right.
Am I doing this to get active income or am I doing this to like invest something for long term? And they're very different strategies.
Yeah, 100%. 100%.
Oh,
That's
here,
it.
you can do this
We
one.
do the photo-
You can go.
Yeah, you're all on camera basically. Like a little quick photography release. You're all on camera. We're doing this on YouTube. It's a live stream. So by being here, you are agreeing that you're going to be on camera to some degree.
Awesome.
Sweet.
Okay. Who's ready to talk about money? All right. Stand up real fast.
Shake it out.
I need a little something. I know it's hot. Pass out some beers, pass out some waters. All right. Who's ready to talk about money? There we go. All right. So you have found a deal. Cory, great. I've got a deal.
Right.
I'm like the dog that caught the car.
Yeah.
Now what?
Yeah.
What do I do?
Yeah, you've been to our last couple meetups. You understand where I found the deal. Now I understand how much it's actually going to cost to fix it up. I know what it's worth when it's done. We got to go find the money. We got to go find some cash to do it. So here's some ways.
Which is the hardest part, right, Cory?
That's the easiest part.
No,
actually.
it's the hardest, right? The money is the absolute hardest part. Who thinks it's hard to find money for a real estate investment? That's okay. Like, who has no idea how to find money for a real estate investment? Let's pull the room. Is that why you're here today? Because you want to find money? Everyone already knows how to find money. Who just blink twice if you're being held here against your will. All right, cool. But I think that's one of the biggest myths is that, let's talk about that, is like that finding the money is the hardest part.
Yeah, a lot of people will say, like, if I only had the money, I would do this.
I love, there's a story Gary Keller tells. Gary Keller is the founder of Keller Williams. He's a billionaire. And someone was talking about, like, if I only had the money, and he's like, you know, I know that's not true because you're sitting in my truck and I'm a billionaire, like someone that he knows. Like, if you don't already know what you're going to do, like, you're never going to find the money if I don't find a deal. Like, if you have the deal, the money will chase you down, right? If I got a deal that I could buy 50% LTV, anybody want to partner with me?
Yes, 100% all day long.
Yeah, it really is that. I don't even have to even understand what I have. Just like, I think I have this thing, and I think we can buy it for half price. Do you want to do it with me? I see the heads nodding. Like, someone will help you figure that out.
Yeah, 100%.
What is challenging, I think, right, Cory, is to talk about investing with that money, and what we really often are talking about is like a tactic, right?
Sure.
Like subject to or wholesaling or some sort of a creative strategy, which is maybe a different thing than
how do I just find the cash, the money for it?
I would agree with that. Yeah, about understanding what your exit's going to be or what that end game is going to be, but finding the capital or finding the cash is typically one of the. If you control the deal, you really control everything in that scenario.
So we're going to talk about creative real estate strategies later this year, but don't discount
the basics work. The basics work. You can make a lot of money with the basics. So I've got a deal. I found this thing, right? I think it makes sense. There's an old lady in my neighborhood, and she just wants this house gone, and I think I can pick it up for half of what it's worth, right? Houses in my neighborhood are selling for $350, and she wants $175. So I'm here today because I want to know where to find the money. Okay, so how could I possibly fund this?
Yeah, so a couple things you can use, right? Just good old-fashioned cash. If you're sitting on that much capital or liquidity, like you can just go out and it's the easiest, it's the cheapest, it's generally the quickest thing to be able to use. But you got to really ask yourself, like, do I want to tie all of my cash up on this one project? That's where usually a lot of people will get kind of hesitant and they start leaning in some of the other directions. Does anybody in here actually like use all their own cash for their projects, or do people just use other kinds of financing? I'm curious to know if anybody just uses their own cash for it all.
I've met some people that use all cash.
Yeah, I've seen it.
And there's definitely advantages. Like I know some people that only buy cash assets,
Right.
but they're playing like a longer term game.
Sure.
They don't have any debt, and they're getting free a little slower. Yeah. So no one else just uses all cash. Got it. Cool.
Yeah. So the other things are going to be like, right, a home equity line of credit, your IRA, stock portfolio. You can either like liquidate or you can borrow against those things.
Yeah.
Home equity line of credit is just basically if your home say worth $300,000 and you can maybe you owe $100,000, you can go to a lender and open up a line of credit for about 80% of that delta, and now you've got some cash to be able to use.
Was anybody here for our How to Use Self-Directed IRA session last year? Okay, a couple did. So that's another one. You can use an individual retirement account or a 401k. There are ways to convert those, or you could be investing those into real estate. You can go back and watch that. All that stuff is on our YouTube channel, so just Grid Investor, youtube.com/Grid Investor. There's a Grid Knoxville playlist, and I think I'd watch that one. Too loud? Oh, subscribe. I was like, that's the code for subscribe, y'all. I love it. Oh, we talk about this one often.
Yeah.
Friends, family, partners. We have seen some bad partnerships in here.
Yeah, no doubt.
A couple.
I mean, it can
Good
happen.
ones, but
yeah, it can happen. I mean, it might seem like a good idea initially, like, hey, let me just grab my buddy and like go into this thing together, or hitting up a family member, which can always make for a very awkward Thanksgiving if things go sideways. So, we wouldn't really recommend trying to bring in.
I know a guy that's going through that with his dad right now.
Ooh, yeah.
Yeah, they're on a property and kind of debating how actively they're going to be involved in it.
Wow.
And it just got a little awkward because they had different strategies on there. I think one of the biggest challenges with partnerships, and we and I had this conversation, right, Cory? Because we were just like, no, we're not giving away equity. We're going to go find out returns. Is you're going to give up more equity in a partnership than you might if you went directly to a capital source. Mm-hmm. Right? A capital source might be happy with an 8% or a 12% return, right? Certainly, which is a lot less than maybe giving away 25 or 50% of the deal in a joint venture. The flip side on that is we've done joint ventures that were 50-50, and they're just super easy. So if you're trying to get started, like, that has been great to have someone, they write all the checks, we did it 50-50, went and did a flip, got it done, split up $45K in profit, not a bad day at the office, didn't have to really understand what I was doing because I knew how to get the construction part done.
Yeah.
And that was pretty easy. And we could do loans, right?
That's right.
So let's talk about loans for a second.
Sure.
Oh, so.
Traditional banks and those.
Yeah, so we'll go back to that one. I think that's a good slide tip. So you've got two different kinds of loans. You got qualified mortgages and you have non-qualified mortgages. You don't really need to understand the difference, but those are terms that'll come up, QM and non-QM. QM is sometimes referred to as conventional, but QM is the term they're using now because there have been some changes. So there's some different kinds of loan sources. And they're important to know because there's some good advantages to some of these. Who here owns a primary residence? Okay. Anybody in here not own a primary residence yet? Anybody else a renter? Awesome. Fantastic. So if I'm on that journey, like one of the best ways to get into investing is to buy a primary residence. and use like the advantages that come with a QM loan where I can put a pretty small down payment down, and then I could go turn that into a rental and do that again. If you got a good income and you just ran that play every 2 years, you will be ahead of most people in this room. It is because you're going to really hedge your risk, and it's really going to simplify a lot of things. If you have the ability, if you have enough income coming in to do that and you're stable, that is a fantastic play, right?
Yeah.
You're looking at doing this again, right? So
Yeah.
you got 2 houses you bought as primaries.
That's right.
And
Yeah,
you
here in
just are getting
Knoxville.
kind of
Now,
squirrely.
yeah, the wife's kind of needling, hey, maybe we need to make a move and this and that, kind of getting that little itch. So we're looking around at maybe buying another house, but we would just turn our current house into another rental at that point. That would just add to that kind of net worth, just add to the cash flow position and all that thing. Yeah, for sure. You could just stack these up every couple of years and be just fine. You could just literally do that play for a decade, really move every about 2 years. If you're willing to move, then it's
It's
huge
often
advantage.
overlooked. Like the simplest stuff, do that. Maybe get some roommates. Maybe get an ADU. Those are all like easy plays if you've got some good screening and you know how to run the play. And additional accessory dwelling unit. So an accessory dwelling unit in the city of Knoxville, unless it's expressly prohibited by a neighborhood overlay or an HOA, you can have an ADU on any primary residence, like a studio apartment or something. It's going to vary by the size of your primary residence and the size of the lot, but typically that footprint's going to be like 750 or 900 square feet. But you can they're automatically approved on primary residence. So just something to look at. It's certainly a great niche there. So let's run through these really, really fast, right? So a VA loan, what's the advantage of a VA loan? You can buy a house with 0% down, right? After 12 months of occupying this, you can go ahead and turn around and rent that out. The one disadvantage might be is VA has something called an entitlement, which is basically how much you're allowed to borrow using your VA loan benefits. And if you move on to another primary, it can affect, like you're going to leave some of that entitlement wrapped up in that first property. That's a great, certainly leverage that out if you're a veteran or if you go marry a veteran. That's a good strategy.
That's another way.
Veterans never
If
get
your
married for housing
if your
benefits.
parent was, might as well pass that down.
I see Travis laughing. All right. What about FHA, Cory?
Yeah, FHA, right? So this is classic for a lot of people referring these to really to kind of the first-time home buyer loan, but it's not necessarily the case in that. But it is a federally backed loan. It's 3.5% down.
Minimum.
Minimum. That's what I used. I mean, really, just to get back into my first house was good old FHA loan, 3.5% down to get in. Use that. That's what put me on my house hacking journey.
Yeah, and there's a variety of FHA loans. You can use FHA loans for units. You can use FHA has rehabilitation loans, like 2 or 3Ks, where I could go buy there and borrow the money to renovate the property. I'd have to use a licensed GC. I mean, for all of this stuff, like get a good lender to walk you through these nuances, okay? Don't ask realtors. If you come talk to us, within 5 to 10 minutes, we're gonna get to a place where I'm gonna say, it depends.
Yeah.
It depends. You need to go talk to, I don't know, like it depends. I was talking to a guy earlier who's a barber, and it's like, ooh, yeah, we need to see how you're showing your income. Like that's gonna affect like how you qualify for some of these programs, and you should just go talk to a lender. Conventional, we've heard this before, 5% down for up to 4 units. So that's a really attractive play. You can move into a duplex or a triplex or a quadplex as a primary. You can use it for primary, second homes, investments. And then just regular other bank loans that follow those. What gets interesting in there is just some of the technicalities, but really I would just talk to a lender. Like, don't overlook some of these QM products. Like, they have some advantages, especially if you haven't bought anything. One of the reasons that people start looking away from QM or conventional loans at some point is because it gets too complicated, maybe proving income, or I can't get my financing to move at the speed of the deal. Those are some reasons why you might see somebody not go through those products, but those are products that you can use.
Sure. Yeah, it can cost a little bit of money, take a little bit more time. They're very solid overall.
Yep. And then you have non-QM. So non-QM is anything that doesn't meet those guidelines. So basically the way that the money market works, right, the lending market works is if you go to a mortgage broker and they're brokering through a third party, like there's some sort of line of credit. And these loans, and even if you're working with a larger institution, there's a secondary market. These loans are being repackaged and they're being resold. So when you hear about FHA loans, what we're really talking about is loans that are underwritten to FHA guidelines. If I go to Regions or I go to Bank of America, they may have an overlay on top of those guidelines. So just again, a good mortgage broker is really great because the challenge on the lending side is people know what they know. Like they don't know, they may think, hey, I've got 300 products, I know everything. They don't know this other product exists someplace else. And I say this, I started my career as a mortgage broker. Like it just is, so there's a secondary market for this stuff. So that's what's driving all of this. And once you understand that, then you can start understanding how like rates work and understanding how the market works and where it might go. It's just that, hey, this money's coming from someplace, these loans are getting repackaged, it's based off a risk portfolio, so these non-QM are just things that aren't underwritten to those other guidelines. Feel free to jump out and correct me if I'm saying this wrong, any lenders in the room. So we've got some different options there, right, Cory?
Yeah, I mean, in just that, right? Like I would figure a best practice is really just talk with a good mortgage broker, talk with a good private money lender, figure out kind of what some of your options are going to be there, depending on the deal and situation that you have. A good person in that space will point you in the direction. If they can't help you, they will point you in the direction for where you need to go.
Yeah, and so just really quickly, so there's a full doc loan. They're going to underwrite that. We talk about full docs, so we're looking for bank statements. They're going to be looking for pay stubs, tax returns. They can do some things that you might not think in terms of lower down payment amounts, or maybe they can do higher loan amounts than you might have heard before. So that'd be like a non-QM loan. Alternate doc might be something like a bank statement loan, or they're underwriting it in a different way, right? So 10% down for up to a $2 million loan is one of the guidelines that Nathan had shared with me here. So you can do bank statements, 1099s, profit and loss. So those are all different ways you might be able to get financed. And then a DSCR.
I can do it. Yeah, cool. So DSCR, I mean, this is one that's really caught a lot of attention over the last couple of years. And really what that DSCR is debt service coverage ratio. In simple terms, they're really just doing that loan based on the asset itself. These are typically not going and looking at your income in the situation. It's purely based on can this asset, can this property, can the income that it creates pay the note on it, right? And lenders are going to be looking for some kind of ratio. You'll hear in that. You might hear a 1 or 1.2, some will go down to a 0.7. That's really just the amount by which the property makes relation to the payment, right?
Yep. So when we're looking at getting approved for a loan, there's the 3 C's, credit, capacity, collateral, right? We all know what credit is. It's my credit score and how I've used credit. Capacity is my ability to repay the loan. And
Collateral is the actual value of the asset, the appraised value of the asset. So there's a couple of different ways those can be appraised. In this case, when you're thinking about debt service coverage ratio, they're using that in place of debt to income. Does that make sense? Like when they're looking at debt to income, that's your capacity.
How much can I borrow? That's what I'm showing. Here, they're not looking at that. They're looking at the asset itself. Really, really popular with short-term rentals. So we hear about them so much here in our market. And then private lending, which we got some private lenders. We're going to dive deep and talk about that with Flint and Chris.
That's right.
Okay, so go back to that first one. We'll talk about just what's the maybe the
Pros,
challenge
cons.
or the
Pros,
if we're using
cons.
traditional banks.
Yeah. So, I mean, typically if we're going to like a traditional bank, the first things they're going to ideally look for is going to be a track record of success. You've done this before, once, twice. The more times, the better. The more confident they're going to feel in your ability to actually kind of pull this off, ensure that this note gets pulled on there. They will usually require an appraisal. I mean, it really just takes longer to get through there because they're going to be underwriting every step of the way. And I mean, really, I guess the last part of it too is depending on the condition of the property, the bank may just not lend on it. It's so bad, it's so in such a state of disrepair that a bank won't even just lend on it in that case.
Yeah, very, very true. And so another source could be, a private or a hard money loan. Private and hard money are not the same thing. They get used in the same way. And actually, I think we might let Chris and Flint kind of explain the differences since we got them here today. So let's do this, Cory. You want to bring Flint and we can run through the hard money stuff when they're up here?
We can dive into it.
Yeah. You guys want to hear from the experts? You had enough from us? Yeah, maybe? Cool. Flint, Chris, come on down.
Come on up.
Look at that applause.
Do we get a chair?
Yeah, you get chairs. They applauded for you even. That's impressive. I don't know if that normally happens. I think it's because
What's your
Flint
good
is
side?
wearing that incredible blazer. I
Someone
have that
move the
blazer.
table, we're just gonna put them here. in
That's a
this
nice
row, and
blazer,
then I'm gonna
Flint.
move
I
this
got
table out of the
complimented
way.
by the CEO of EXP rocking that thing. That's a sick color. I like it. Let's get this out of the way.
Yeah, I got it. I got it.
All right. Have a seat in the hot seat. Wait, one more here.
Where do you want me?
I got it.
Is this on?
Yeah, it's on. You're
This would
live.
be a lot cooler intro if there's like music and lights, like a basketball game, you know?
We can. What would be your intro song?
It'd have to be like that famous one, like dun 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 dun, you know, and everyone's jacked up for private lending. Yeah.
We all know the dun 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 dun. Yeah, I love it. Like the Chicago Bulls song.
Yes.
Okay. Yes.
Oh, yeah, all right.
Yeah.
I love it.
The one and only.
90s Bulls. I love it.
You're
I
really-
think everyone here is pretty jacked up for Atlanta. That was a good applause break. I was juiced.
You're really close to me right now, Justin.
Well, there's not. Oh, there you go. Thank you. So.
Do you know I need this?
Yeah, if they want to hear you, we're gonna have to share. We're all gonna have to share mics. Yeah. So, you might know these fine fellows if you've been here before. We've got Chris Davis and Flint Griffin. Chris, who are you? How'd you get into private lending?
Got into private lending about 4 years ago. That's my brother, by the way. We're brothers. We lend our own money. We live here in Knoxville. We own a company called Approach Lending, which is just the name for he and I lending our own money. Fix and flips, rentals, and stuff like that. I was on the show First Time Flippers. He just reminded me of that on the way up here in 2017. It's actually a really, really funny thing where they pitted me against my cousin for dramatic effect. But that's what I've been doing. I was never a really good flipper, to be honest, but we found our niche with lending.
I actually met you on a flip.
Yeah.
Yeah, over right in
Harper
North
Jones.
Knoxville. I remember this. Yeah, you were looking at a flip together, and it was. And you said you were happy not to be doing it anymore. When we sold that one, when we did that grid happy hour. I remember that. You're like, yeah, I don't like flips.
Yeah, but I've done it again since. So it's an addiction, you know.
I love it. Flint, how did you get into private lending? Who are you?
20 years now. I've been in various forms of lending or real estate investment, mostly commercial. I was thinking about how long I've been doing this earlier, and 20 years ago, almost to the month, I made my first private loan as a young man, and fortunately it worked. I liked it and have been doing it really in various forms ever since. We started, as Chris said, 4 years ago, Approach Lending.
So let's go back 20 years ago, right? It was a better time for all the young bloods. You missed out. Before social media, life was fantastic.
He had more hair.
Lots more hair.
Yeah. So you've got a full head of hair. You're crushing life. What did you do? Tell us about that first loan you made. How'd you?
I
Was
borrowed
that money you'd saved or yeah?
No, I borrowed money and over collateralized the loan because I was scared. And fortunately, the borrower paid me back in relatively short order.
What do you mean when you say you over collateralized the loan?
Well, I made the borrower had some other assets, didn't have money, but had assets. And so I asked the borrower to essentially collateralize those assets, meaning if he didn't pay me back, I could go after the asset that he had pledged, to me.
Awesome. And so how'd you find that person to lend this money to? Did they come to you or how were you introduced to this?
Found me through a mutual friend.
Okay. And you just knew that was something you might be doing. Were you working in the lending world at that time?
I was in law school at the time, but had family members in banking and had studied finance in college, and frankly, just during the course of the conversation with the would-be borrower, became really interested in what he was doing and trying to accomplish, and believed that he could, and so I found a way to help him.
Oh, that's fascinating.
Yeah.
So.
Much the same as Chris and I do now, frankly, with people that we talk to. Do a lot of work with first-time flippers at Approach Lending.
And Chris, same question for you, because I think what we can get into the details. You can ask any questions you want about the terms and how this stuff works. But I'm curious, one of the things we talk about in Grid is we take you on the life cycle of an investor. That's why we do everything sequentially. It's kind of walking you through. And this is a position that you can play on the field. It's one of the strongest positions in the game. Is lending out your capital, and you went on an investing journey yourself. So walk me through, like, when is it something you always knew you might do, or how did you go on that journey from like, I think I want to do this more than I want to fix and flip?
I think everyone has personality types, right? And as you explore everything in real estate, you kind of figure out what works for you, what doesn't. Where's your skill sets elevated naturally? And I just like numbers and a lot of back end. A lot of lending is a ton of back end work. You wouldn't actually think that, but it really is. And so I like that. I like building systems and back end stuff. And was that your question?
No, but that's a good answer. Flint has been very gracious in saying
He's
that
the smarter one. Ask him questions.
Flint says that you're the workhorse and you just work an incredible amount.
It's true.
Yeah.
He said that?
Yeah, he did actually last month. He said that. He said Chris does an incredible amount of work and puts out an incredible volume of work. So when you started, you went into fix and flipping. What got you to decide, hey, I want to go fix and flip?
That's just what people were doing in 16. Like we were deep into the TV shows and all that, and I didn't know what I was doing. I was living in California. Actually, had started a sober living. Was technically my first foray into real estate, and it was a total disaster. It was terrible. Everyone ended up on drugs. So, but I got out of that because I was a terrible manager of that. And then, came in and bought my first duplex in Knoxville. Actually used Jacob Lee. True story. She didn't pay me to say this. One of the sponsors here, Kristen Wallace with Jacob Lee.
That's how we met.
Was my property manager for that property.
And so you used her. Were you doing the work yourself? Were you just like contracting, like using a GC or somebody? Or
tried doing all the work myself to start. I did one day of demoing a floor, and it had those like old nails because it was from the 40s, and my God. Yeah, I learned right then and there. I'm going back to the back end admin guy and hiring people to do it. Not handy. So then we hired people, and then they took advantage of me, which this is part of the life cycle of flipping houses, right? You got to make a ton of mistakes. The contractors can smell it. You know, they know this guy doesn't know what he's talking about, and then they charge you more and don't do the work and blah, blah, blah. So I went through it all, learned a ton, man, 2017, 18, 19. Luckily made money because it was hard to screw anything up. I mean, it's been hard to screw really anything up for 8, 9 years now. But, flipping, I'm rambling now, so.
No, I think that was great. Because I was sitting here with someone earlier and she was telling me about a mistake that she thought she'd made in investing. And I was like, everyone in this room makes mistakes all of the time. Like that's another illusion that like everyone else, there are no adults. There are no grown-ups in this world. No one has this figured out. It's shocking. Like when you start talking to more and more people, right, Cory?
Yeah, 100%.
You know this. You're talking, and you guys lend money. You see the inside of people's finances, right?
Every day, lots of times a day.
Yeah. I remember being a mortgage broker. You know who has terrible credit? Doctors. Doctors always have bad credit. They're no good managing money. They don't teach them. They take on an immense amount of debt when they're in medical school and they're experts at this one thing, so they think they're good at everything. Yeah, no, they consistently have bad credit actually. So just know that when you're talking to your doctor next time, like.
That he has bad credit?
Possibly. You possibly have a much better credit score than him. So you're all doing okay, like Tom Papa would say. So no, I like that. So you said you went on there, weren't having success, people were taking advantage of you, and then when did you get into private lending?
Made a couple loans in like 2019, just randomly terrible loans that worked out. I didn't know what I was doing. So he was like, "Can you have money?" I was like, "Yeah." Lent it to him, 100%, all that stuff. So I did a few of those kind of privately, and then I was drifting really in like 2021. I had gone to work for one of the family partners, and he looked at me on a business trip one day and goes, "All right, you've been working with me for 3 months now. I want you to spend the next week figuring out what you're going to do with your life." And that's when I came to a family member. Actually, Flint really, truly had the idea, like, hey, you should think about lending. We have some family members in banking. Maybe they'll back you. Went to that family member. He was absolutely unsure at all whether he should fund me. And he took a risk, and then, we've just proved out the process more and more over time. It's a never-ending process. I mean, you're always learning something in this business. You're never going to be an expert. Always be weary of the experts, right? Because those people, the people that think they know the most, are probably the ones that are the scariest to deal with.
I think that's a great point. I'm going to take this back to Flint because Flint's got how did you get into, we had a great conversation, it might have been a year ago, when you kind of shared a little bit about your journey on the lending side because you went through the Great Recession on the lending side.
The commercial lending side, yeah.
Yeah, I'll try to do it quickly. Graduated from law school, went right to work for regional commercial real estate developer and investor. They built shopping centers, multifamily, and CVS pharmacies all throughout the Southeast, but primarily in Florida. And it was a great business, and the owner was a mentor as much as he was an employee or employer. And so I learned a lot, and he involved me in a lot of the different aspects of the business. Shortly there, let's see, so that was 2005 and 2008. Many of you may remember the economy, really crashed, particularly in real estate, and particularly in South Florida. I was in Miami. I'd done a little bit of everything in commercial real estate, except for the financing of commercial real estate, and that's really was what I was most interested in college. The company I worked for had a really good CFO who handled all the financing for all the projects that we did. And so I went out and found a boutique firm that specialized in bridge lending, essentially, which is just short-term lending. It's really all that was happening, in commercial real estate at the time, because all of the traditional banking sources, just think big banks, small banks, regional banks, life insurance companies, CMBS lenders, they stopped lending for the most part. And so all that was left were kind of these, just think New York hedge fund backed funds that would make short-term loans to people, higher interest rates, and they would be very creative and help, people do deals. And a lot of it was buying, I won't get too complicated here, but they were buying notes at the time and distressed debt. It was a tremendous opportunity for me because, getting to learn all of that creative finance really just kind of opened my eyes to, how to look for different ways to structure a deal. And that's one of the things, frankly, that I think we do a really good job of at Approach Lending is, we really try to find a way to make a deal work. And so, a lot of lenders are going to, look to see if you fit inside of their box. And if you don't, they're going to likely deny your loan request. We're going to look for a way to try to get the deal done. And so I think I learned a lot of those fundamentals and principles, during that time. So from 2008 to 2012.
Were you buying individual loans, or were you buying like tranches of loans?
So I was
of notes, I mean.
Yeah, so I was a
notes.
correspondent lender, and so we were essentially, we were a glorified broker, but we would actually underwrite all the deals. It's kind of the difference between a correspondent lender and a broker. We would underwrite everything and essentially give a lender a package that had been completely underwritten, frankly. And to answer your question more specifically, it was both. So in some cases, it was buying multiple notes from a bank. So the banks had taken foreclosed on properties. They had these, or they had an existing note that they wanted to get off their books because they were pressured by the regulators, and so they would sell these notes at discounts to other investors. It was a crazy time. I literally saw people who had been foreclosed on by a bank, and they would then go out and find a partner or three partners, and they would buy back the same property at a huge discount. It was wild. Hopefully we'd never have to go through that again, but it was an interesting time for sure.
And then just one thing, we're jumping over all this, but just something to keep them. I was going to explain correspondent lending, but we don't have to really get into it. But there is a difference on that landscape of mortgage brokers and who's doing the underwriting, and it can affect who you're working with. A correspondent lender has their own internal underwriting, can have a lot more speed and control because they can just go walk over and ask the underwriter, hey, why am I getting this stipulation? Some of the challenges you may have when you're doing conventional lending is that it's just the structural stuff. That's why it's such a pain to go through, like some of the big banks, Bank of America, Wells Fargo, whatever, because structurally they suck internally. Their LOs that you're talking to at the local branch are calling a 1-800 number. And so that's some of the stuff on the lending side we're looking at of like the differences.
100%. And frankly, I think Chris and I have tried to replicate to some extent that correspondent model in the sense that, when you work with Approach Lending, we're going, it's a cheap plug here, I'm sorry, I couldn't help it. But you're going to work directly with the decision makers. Chris and I decide on every loan whether or not we're going to make the loan. And so, that's one of the advantages of working with us is that, we're going to help try to figure out how to do the loan. And if it goes bad, and loans do inevitably go bad, we're going to work with you. And that's what you want to look for in a lender. Yeah. Yeah.
He's vicious.
Well, I think it's kind of a perfect opportunity to at least bring this down for some folks at just kind of like a one-on-one level. Like, I hear the terms private money lender, hard money lender thrown around. Is there a difference? If so, what is that difference?
Yeah, I mean, I would say that hard money lending is a much more broad term, I think, that kind of just generally refers to, money that's expensive, right? And it could be either from a fund, right? So there are businesses out there that pool money. They could be getting it from banks. They could be getting it from investors that say, hey, I've got some money. I'd like to get a yield of, let's say, 8%. And so you'll raise a big fund of 8% money, and then that fund will lend it out to people like in this room at 10% or whatever the rate is. So hard money really refers to just a very broad range of kind of expensive money. I think private lending is a little bit, more specific in the sense that it's going to look more like Flint and Chris, or there's some other people in the room here I know that are good lenders as well. That's really kind of more what private lending refers to. So someone lending their own money.
I have a question about hard money. One of the things that I've seen or I've heard with hard money deals is people working with, it almost sounds like more institutional than a private, like I'm not working with the decision makers, and then these terms getting changed on people in a way that I don't hear with private lending. Is that accurate, where it's like, hey, I thought I had this, and then the appraisal loused this up, or some of these hard money companies, is that a specific distinction, or is it just a term that gets kind of thrown around that doesn't have a lot of meaning when I say hard money or private lending?
No, I think you're entirely correct. There's certainly good hard money lenders out there. Generally, hard money lender, you're going to have a lot more bureaucracy involved, so there are a lot more people involved in the process. It would be very rare that you would actually get to ever talk to someone who has any decision-making authority. You're generally going to be talking to some type of either admin or salesperson. And the salesperson, like any of us that are in sales, they want to sell, right? And a lot of times they're commission-based, so they're going to really be trying to rope you in without really knowing whether or not they can do the loan. One of the things that Chris and I try to do is, frankly, we'll tell you really quickly based on your assumptions whether or not we can do the loan based on the numbers that you provide us.
I saw Lisa had a question.
Yeah, somewhat of a comment, actually. That can be very regionally specific in terms of hard money, because there are some in certain regions that went through a lot of what you were talking about in 2008 and after very quickly, that have really, really good hard money lenders that are very kind of user-friendly, if you will, and very detailed and focused on lending in the right ways. I also think what we might have skipped over is, why would somebody need to go for hard money? Because there are really real-life factors for people like business owners and things like that, where people need to get hard money loans, so maybe talk about that a little bit.
Yeah, so why do people use hard money, or why do people use private lending instead of using, some of the other types of financing? I think that's a great question.
Well, you may not have the income, especially if you're in this business. That's probably the thing we see the most, is you don't show money on your tax returns, like Zach over there, right? You can hide it very well in real estate, and that's a benefit. The con is you can't go to a bank and get a loan because they've got regulatory standards. So we see that. Credit, though a lot of hard money lenders do have credit score minimums, just like a bank. When you go to the private side, like us, you can get a little more flexible with credit. Like we do soft pull credit, but we did a loan with a 585 credit score today. We approved a loan, and it's because we were able to get the holistic picture.
That's for a doctor. Sorry, go ahead.
Real estate agent.
Might be a doctor. Yeah. So, we were able to do that. There's a lot of reasons. Like we deal with people who have a lot of cash. They don't need us, but maybe they can do one flip at a time with their own money, and they can make 50 grand, but they can use us, and yeah, it's expensive. It may cost them $5 grand a deal, but they can do 2. And so now they're making 100,000, but they had to pay us, maybe 10. So they're still making a lot more money.
It's Velocity Capital. One of the other things that I see, even for us, right? So we've got an entity together where our partner has 17 entities, like getting my K1s and my tax returns, and it is not always, it's gotten faster. but like I may not have all that documentation. Like I may like the documentation necessary for me to go through some of those hoops, like is not worth the time involved.
Can I comment on that?
Please.
Like if I'm an investor, which I am myself, but I would definitely try to connect with everyone in all aspects. And I would start with the bank because they're going to be the cheapest financing you can get. The problem is everything they just said. They're going to be long, they're going to require a lot of stuff you got to fit in the box, and a high propensity to leave you at the table with no other options. But you should definitely have that in your arsenal. And then you have hard money lenders, and then you definitely want some private money lenders, because there's a lot of private money lenders too that will do second position lending. We don't do that, but we have people that use that for our own loans, where they'll find some, Joe who has $20,000 who can bring it as a down payment for a little extra money.
Chris, what's the difference between first and second position? And then I'll come to you, Morgan. Come over here real fast. I'll put you on.
First position, like when a bank does a loan, they file a lien with the state usually, and that puts them in first position priority. So in a foreclosure, their collateral, they're in first position. They're paid out first. Second positions, generally, I say generally paid out second, but they would actually get superseded by mechanics liens usually. So contractors are very well protected in most states, rightfully so, because they've done work, and if you don't pay them, they're going to slap a lien on your property. Not in front of the first, usually, the second. Yeah.
Yeah, I want to make sure, I'm sorry, I don't know that we answered your question, I'm sorry to point at you, but can you, I don't think we did we?
Well, it was more for the people in the room, but
Okay.
so I think the reason I'm saying that is because a lot of times we're talking, and I did the same thing when I was sitting where you guys were, so it was a lesson learned not to go into detail on something that we didn't explain the why around, so, I just want to make sure everybody in the room understands why would somebody potentially need to go with hard money? Like, it happens sometimes, you may not have a choice, or to Cory's point, like the velocity of the deal, like you may have that next deal in front of you and it is so good and you're like, damn, if I let this pass me up, whatever, and that may be the route you have to go real quick. And there's some less prepayment penalties sometimes depending on the hard money lender. So I just wanted to make sure people understood why, the why behind each type.
Morgan has a question over there.
Yeah, sorry.
Because I think I can help part of that. So I have used Chris when I have multiple capital sources, right?
Move in the center, buddy. Come on now.
Sorry about that. I have lots of different ways to get renovation loans done. I can do Fannie Mae, renovation loans, all that. But I chose to use Chris for my own fix and flip, my first project last year, and the whole reason is opportunity speed. I was clear close with Chris in under 24 hours. When I actually sent him the deal, I was ready to go fund right away. I pay a higher interest rate, I pay higher closing costs, but the 25 to 30 days of processing time is real opportunity time and velocity of capital time. And also, it's just when you're dealing with private money, it's just a much easier situation for draws. I have way less fund control over how I disperse the money that I draw from Chris. And also, it's just a vastly different experience because there's no third party like a HUD consultant or anything like that. Chris is just like, did you do the work? Show me some pictures. Here you go. Here's your money. And the turnaround is extremely fast. I think all of my draws were completed within 24 hours, which is truly exceptional in the hard money space. So did that cover some of what you're thinking there? Mm-hmm. Yeah, I promise you, all of those things is exceptional not only for renovation lending. It's way better than renovation or bank lending on these type of properties, and also it's also exceptional for hard money.
We need to pay him to just sit here and talk for us.
Yeah. And so let's talk. Can we do some basic stuff for the people that are brand new here? Awesome. So we talked about some conventional financing earlier. So we said, hey, if you're buying a primary because you're going to house hack, which we recommend if you're new, you could get into a home for as little as 3.5% down, 0% if you're a veteran, or 5% with a conventional loan, right? A lot of investment loans are going to be 25% is a pretty normal LTV if I'm doing an investment loan. 25% down payment, so 75% LTV, right? If I'm looking at hard money in general, just like in that landscape, what does that look like? And then we can roll, can we talk about the landscape and then we can talk about how you guys do it and what that looks like, and then we can answer specific questions. Does that make sense?
Yeah.
So what's the landscape look like if so maybe I can go with a regular investment loan from a bank or someone I might know, and I might be able to get a 75% LTV loan maybe on like a long-term rental? What does that look like if I get into the hard money or the private world? How much money do I need to bring to the deal?
Yeah. Well, if you go hard money, you're going to see anywhere from 0 to 30% usually down. And kind of the less you have to bring down, probably the higher cost it'll be. Even if they don't like advertise that on the front end. I think generally you see anywhere from 20 to 10% down required. And then they have all sorts of other things they could look at depending on how large of a company they are as far as like reserves go. And that's where the hard money to private money thing does come into play. The more private you get, the less like rigorous standards they're going to have. And a little thing like, this is helpful, so I'll mention this, but like when you go private, they tend to care less that you may borrow your down payment, like through a partner or a second position lender. And the more banky you get, and hard money would be more banky, right? They're more stringent, they're going to look at that and not be okay with it. And so that's important for you to know if you're coming into this with not much money. I would encourage probably to go with a private lender because they may be willing to either point you in the right direction of someone who could help you fund that 20% or partner with you, or maybe even partner with you themselves, than a hard money lender. So that's kind of the landscape. If I was new, I would expect to try to come up with 20% down.
Okay.
Yeah.
Yes, Duke.
Here's a question for the lenders. I noticed just a second ago you were talking about the fastest and easiest way to go. Say the words correctly. We'll start with a bank. Is that what you said? So, okay. Do you use banks interchangeably with credit unions? I don't. I've had a ton more great reception with credit unions and fairer and everything else. I'm just saying that.
So Duke, what Duke is just saying is what Chris recommended if you're getting started, build a relationship with the bank, and Duke is just recommending that, hey, really go talk to a local credit union, and they may have some options for you to explore.
Take this.
He looks like he has something to say.
They're more flexible, and also they make decisions a whole lot more locally, I found.
And he's saying again, because that credit union
That
is
is true.
making decisions at a local level, or they may have more flexible standards, than if you're going to like a national bank.
Yeah.
A little bit more, yeah.
Yeah, no, you're entirely correct. I actually sit on the board of a bank in Phoenix, Arizona, and we badmouth credit unions all the time for various reasons. But certainly, you're correct. They can move. They're more agile. Going to be a little bit more flexible.
More sense.
Yeah. So certainly, if you're going to go
That's why they badmouth them.
if you're going to go the bank route, that's certainly worth exploring. I think Chris's main point is just you really want to try to just like if you're looking at the construction piece, you want to have multiple subs, right? You want to also have multiple lenders because different lenders are going to have different appetites, right? And frankly, those appetites may change. If you're dealing with a bank, they change with the wind sometimes. And so, ideally, you would always deal with a bank because it's cheap. But again, they're slow, generally speaking. So, when you're starting out or if you're accomplished, either one, make sure that you have multiple options across vendors and certainly across lenders as well.
And so let's talk about just the process. You have any other questions, Cory? I got some written down right there before we skip ahead.
Yep. I think one thing we might not have stressed is just the fact that these are for investment properties only. This is not a loan type. This is not a loan product, hard money, private money. This is not something you're going to use for something you're going to live in. This is why they're like commercial loans, right? These are not meant for something you're going to live in. These are for investment purposes only in that. What I'm
My company sold my house to myself.
Seen it.
Mortgage
Good
fraud
idea.
is a crime,
real thing.
which I was going to say separately.
Yeah.
But no, just like hear me.
What's his name, Chris?
And I'm just joking with Scott, that's separate, but mortgage fraud is a crime. I was a mortgage broker. I started in 2005. I saw an incredible amount of mortgage fraud. I'm talking on a daily basis, saw an incredible amount of mortgage fraud where it was like, oh, I understand these Enron emails because when everyone is committing this much fraud, it just seems like this must be normal because everyone was committing this much fraud. The company was owned by the Gambino crime by the Gambino crime family. It's a true story, right? Like there was just a massive amount of fraud that was occurring, but I don't even think that was just, it's a bunch of AmeriQuest guys that were doing this. Like, it's not worth, we're talking about how to get wealthy, not how to get rich. A lot of people get rich and they lose it for building wealth. Like there's a reason, there's other ways to do the same plays without committing mortgage fraud. I'll just put that out there. It's very easy to get caught, and it's very easy to get around some of these guidelines if you're intelligent and you ask, how can I legally do the thing I'm trying to do? Just side note.
Yeah. I mean, we talked a little bit earlier about just, the velocity of money, right? The speed at which you can move. I wanted to kind of comment a little bit on just one of the benefits to using, say, private money or hard money is typically you can get a much higher return on your own cash that's in the deal, or any cash that you're bringing to the table is significantly more than if you were just funding it all completely in your own cash. By which I mean, like, we're doing a deal right now that goes on the market tomorrow that was about $40,000 in cash, call it $45,000 in total cash needed to go do the play. But on the exit for this flip is about a $60,000 profit margin. So I can, even after everything expenses out, I'm looking at least doubling my money on it all versus if I just used all of my own money into that project.
So let's walk through what this actually looks like, because it might not make a lot of sense. One of the reasons we're using private lending is because a private lender can underwrite this off of after repair value. So they're looking, or maybe sometimes even a DSCR, some of these loans, when I start getting creative, they're looking at like what's the upside on the project. So when I talked about buying that project for 50% of what it is, like if I've got that amazing deal, I might be able to get a really strong position, because they're going to look at like what's the potential upside, what's the exit of this. So let's talk about that, like on Flint. Like, how do you guys underwrite deals? What does that look like if I have a typical? Maybe we can walk through like a typical deal for the private lending side.
If you don't mind, quickly, I do want to. You touched on, the great conundrum in real estate, and that is, what's an appropriate amount of leverage. I could literally talk about that all night. I'm not going to, but you're certainly when you're starting out, you're likely to have limited amount of cash to work with, and so you're likely to be forced to use a lot of leverage. If I were to give anyone any advice, I would just say that have a plan, and I'm not talking about a plan for how to renovate a house, but have a plan for as you progress from your first deal and through your next deals to try to leverage. Certainly increases returns when deals are successful, but it also is what can destroy you. And so have a plan for really two things. One, how much risk do you want to take? And that's really what leverage is. So what's your risk tolerance? Are you willing to risk it all? When you're in the beginning, you likely have to. But as you experience some success, maybe continue to revisit that. And then also just, be patient, because, and particularly when you're starting out, that first deal is the most important deal you'll probably ever do. So, be patient.
When we're talking about leverage, we're talking about the inverse of loan to value. So if I only put 5% down, I'm 95% leveraged in that deal. It's the beauty of the American real estate market that 30-year fixed mortgage is why we can all have the standard of living we do. It's pretty incredible. But when we get on the investing side, it's how you see people, and I worked with these people that had 17 homes and lost them all in the Great Recession. It's a huge minority of people that went under were people that they were A-rated borrowers that made a rational decision to walk away from their portfolio because it had lost 30% of its value. We worked with these people and short sold their properties. I did.
Yeah. And I'll let Chris handle your second question. And that was
which is related to
ARV structure.
Yeah, we underwrite things based on after repair value if it's a fix and flip. So what is it going to be worth when it's done after repair value? It's actually a pretty simple equation that most hard money and private money lenders will do. Usually you'll see about 70%. So you take whatever you think the after repair value is, multiply it by 70%, and then you subtract your estimated construction costs, and that'll give you kind of the max potential loan they would give you for the purchase. Because most hard money and private money lenders will fund all of your rehab. They'll just assume they're going to give you 100% of the rehab. It's really a matter of how much they'll lend for the purchase. So if you have a $100,000 after repair value, the max loan is going to be 70% of that, which is $70,000. If your construction budget was $20,000, it means they would lend for purchase is $50,000. So some lenders, if you were buying it for $50,000, may loan $50,000 for that purchase. Others still have a down payment requirement. So irregardless of how good of a deal you have, how low leverage, they may still require 10, 20, 30% down. Most will have some sort of down payment, irregardless of how good of a deal you have.
Any more questions?
Yeah, I'm to that note, as we're talking about ARV and estimating aggregate repair values, and I just came back from a conference with 200 top mortgage real estate sales and brokerage leaders from like around the country, and it was just interesting to hear some of the different market shifts happening in some different areas. Some areas are hot, some areas are cold, etc. But I'm curious, man, I'm sure you guys have conversations with the folks like all across the country, but have you seen lenders pulling back on their after repair value estimates? Hey, I know the home down the road sold 6 months ago or a year ago for $300,000. Are you seeing any hesitancy? Are you seeing any of those ARV estimates?
He'll
come
definitely
down?
want to comment on that, but just to start, yeah, 100%. The comps we were using 6 months ago are not really being used today. I was talking about that before this meeting started, especially seeing that, and I'll let Flint talk, in the more tertiary markets. It's like your Harrimans and Strawberry Plains or the smaller markets, and especially if it's rural, we are really seeing those sit a long time. We've got one that had a $150,000 price drop. I mean, it's way below what we estimated it would be below, which is very rare for us. So I would just say, proceed with caution, especially if you're in the more tertiary market.
Yeah, I think as far as, certainly days on market are increasing almost universally. You certainly have pockets of strength in most markets, frankly, in the country. But I think we're not seeing, I wouldn't say that we're seeing huge decreases in pricing, certainly in the Southeast. The market's still pretty resilient. But days on market are, is a leading indicator. And so, you should pay attention to things like that.
That's probably the most interesting thing is we track all this data extensively. We've seen the days on market trickle up for the last few months, but prices haven't trickled down at all. So that's the interesting thing. Things are selling, and they're selling at good prices, just taking longer.
So we've got a question because we talked about how to be the bank. And so one of the things, on there would be like, I'm on this journey. I want to do what y'all did when you were getting started. And I don't want to become a full-time private lender, but I'd love to maybe lend my money to somebody in the room. Do you have any suggestions on how to do that?
I have a lot, but
Carefully.
go ahead.
Carefully, okay.
You want me to take this?
Yeah, please.
Well, you just have a lot of options, and it's really about what you want to do. I do think it's been popularized since that Lend to Live book came out. It's actually a pretty good book. I read it. And it gives you a lot of different strategies. But I think people hear bank as like the easy route of real estate. And what I've learned is if you're in this real estate game and you want to be successful, whether you're a realtor or a broker or a wholesaler or you're flipping houses or you're the lender, you're going to have to work your ass off if you want to be good at it. So just know that going in. But you have a lot of options about how you can lend. If you have money, you can do full loans. You could be a second position lender. Really, if you're a money partner, you're essentially a lender. And then because a lot of people call me. I get at least 2 or 3 calls a week where someone we've connected with, because we do a lot of cold calling, where they're like, hey, I'd like to be the lender, and I walk them through their options. Usually what they end up wanting to do is actually being an investor to like another lending company, like a REIT, or there's all sorts of ways to do that, or they know other private lenders, because especially when you get to the hard money lender versus the private money lender, they're raising capital and they're paying a return. And that's probably the only passive thing in real estate that I've ever seen. Like rentals, we say are passive. They're not passive. If you own rentals, you know that. So you have a lot of different options for lending. You have anything to add there?
I do not.
I could go on all day, and I like talking about it. And
I've got a question. So how much capital did you need to get started as a private lender?
I mean, it's helpful if you have a lot of capital, right? Your returns are going to be a lot more. This is where the people don't think about lending. We make maybe 4,000 or 5,000 max per loan. So to make a living, you got to do a lot of loans, and they pay off really quickly. So it's a huge grind. So if you have money, you're obviously going to be able to do more. But you don't have to have any money. You can raise other people's money. And then if you want to be the hustler and you want to be the grinder, you can go out there and do the deals. And you got to manage two things. You got to convince people to give you money, which is really hard, usually. And then you got to find the deals within a very competitive market. But it's certainly doable. I mean, anyone in here can be a bank. Anyone here can be the top producer as a realtor. Anyone can be the best wholesaler in this market. The real question at the end of the day, and I'm totally preaching right now, is like, are you going to outwork that guy next to you? I mean, that's really what it comes down to. And I can say that because for the first 4 years of my real estate career, I was not doing that. And when I switched to that, you start to see all the puzzle pieces fitting together. And no matter what, I wanted to say this tonight, because I know a lot of people in here. I've sat in this room when I didn't know what I was doing, and I didn't have the success I wanted, and it was terrifying, man, because you see all these people who've made it, and you're like, how am I going to be them? I'm not them. We're all just faking it till we make it. And at the end of the day, the one identifying factor is, are you the person that's the most organized? Are you the person that's working the hardest? Are you picking up the phone and cold calling? Are you out there posting political shit on Facebook, or are you cold calling people to get yourself some deals, right? Are you going to outwork the next person and be better than the next person? If you do that, you're 100% going to be very successful no matter what you want to do. Lending, wholesaling, whatever. I studied ministry. I have to give a sermon every now and then.
I love it. Who's got a question? Yes.
Yeah.
No, I agree. Thanks for everyone who was clapping. Who's got a question?
Take that away from me.
Well, we got Flint and Chris up here. Come on up, Eric. Lisa.
Yeah. You have to go over right here so we can be. There you go. Boom. Look at the camera.
Walk with style.
Yes.
So coming in. Oh. Bye, guys. So coming in, moving to the market, renting now, looking to get a primary in the market. Are there any loans that are even assumable anymore?
Are there any assumable, are you looking to go get a new loan that's assumable? Or are there any loans that could be assumed? Yeah, there's plenty of loans that are assumable. There are plenty of loans that are assumable out there.
Because I talked to someone each, they just don't do that anymore.
Yeah, there's assumable loans.
Is the short is the
specific categories that allow that, or?
Yeah, VA loans. There's some other categories we can earn out, but there's assumable loans if you're trying to do like a subject to or something. Like I see them.
Okay.
Yeah, Lisa, what's your question? Come on up here.
Well, I was just gonna say, did you wanna talk about seller financing and seller freedom?
We
That's
can.
next month.
That's really next. That's the next month thing. We're going to talk about seller financing and seller carrybacks and yes, no. So and that's a great combining these strategies where things start to get really interesting. Who else has a question? While we've got Chris, who has a question they're going to come ask me immediately after? I'll ask it for you, but you're going to ask me, and I'm just going to have to get them anyways, and it'd be great to have on camera. No? Yes.
What's your ongoing give or take rate as a private lender?
Oh yeah, let's talk terms. They got the whole term sheet right there. What are your rates? What are your terms?
So we're 12 to 12.99% interest only, and that rate is going to vary, frankly, just on location. So in our more tertiary market, we're one of the few lenders, frankly, that will do tertiary markets, and somewhat rural. Chris is going to kill me for saying that. Loans as well, and so that would be more close to the 12.99. But generally, we're going to be right around 12% interest only. No prepayment penalty. We charge 3% of the total loan amount at closing, and we do 9-month loan terms. One thing that I think is particularly important for everyone that's thinking about getting private lending or hard money lending, however you want to refer to it, is many hard money lenders and some private money lenders will give you 6-month loan terms, and that's worked when houses were moving very quickly. As you see days on market tick up like they are now, that's going to be very problematic for you. And it's a game that a lot of lenders play. And they'll give you a 6-month term, they're going to say, oh, we'll only charge 2 points. But what they don't tell you is when you've run into any kind of delay or it's taking you a little longer to sell your house for either, whatever reason, they're going to hit you with more costs and more fees to give you an extension. And so, one of the things that Chris and I have really, frankly, focused on since day one is we want to be a partner as much as we're a lender. And what I mean by that is if our borrower is successful, that means that we're going to get paid back and we're successful. And so we've tried to set our loans up, frankly, so that our borrowers have the time and the ability to be successful. And we've done that, frankly, in 2 ways. One, we've given longer loan terms than our competitors have since day one. And 2, we fund our draws faster than I think anyone in the industry. I've never heard of anyone that funds draws within 24 hours. And when we do, you send a draw request in to us by 12 p.m. Eastern, the money will be in your account the next day. And it happens. Probably a dozen people in the room that can.
We did
attest to
some
that.
market research before we started, and our market research is we actually used private or hard money lenders ourselves. That wasn't my market research. I just was using them because I had to. And what I learned some interesting things to look out for there. One is they have the same data we now have, and like he's saying, they know that like 90% of people will not pay off their loan in 6 months, and so they can advertise a lower rate and lower points, knowing they're going to hammer you at 6 months with fees, right? And on that thing, the other thing I learned is that if you're going to use hard money and private money, have them be very specific with you of all the fees, start to finish. What's going to be on the settlement statement? 11% or 11% rate and 1 point sounds really good until they have like 2 points worth of random nonsense on the settlement statement, and then prepayment penalties and all that stuff. So just be really careful about that stuff.
I don't think I mentioned we do not have prepayment penalties.
I was trying not to do a sales pitch, but yeah, I mean, there's some things that our biggest sales pitch is actually our worst sales pitch because we're 3 points and it's like our all-encompassing, like this is it. Our whole business has been like, let's keep everything simple and what you see is what you get. And we've done that since the beginning. Like there's no surprises. Like this is it. Take it or leave it type thing.
Do you require experience?
No, we don't. Yeah, I mean, it's helpful, right? Kind of everything helps. Good credit helps. Cash helps. Experience helps. But at the end of the day, if you got a good deal and you got the money. And earlier they mentioned lenders look for capacity, collateral, and credit. We like to throw a 4th C in there, which is character. We like to talk to you, and if we feel you got the 4 Cs, we're likely to do something for you.
But that's a great question, and it goes to Lisa's point. One of the reasons why I might use private lending is because I'm trying to build my resume. I've got a good friend, Jeff Van Nostrand, shout him out, who all he does is broker new construction private lending. It's all he's obsessed with it. He loves talking about it. He thinks we all should be doing new construction builds. And just when you look at like the speed of going private versus going with the conventional bank and the draws, it's just a speed play. It's a cost of carrying play. It's just much simpler to do that. And one of the reasons to do that would be you've got to build a certain resume as a builder. We were talking about doing some projects together and getting creative with the structuring where we're like, who cared about the money on the back end, but we were on the same, showing up as the same borrowing entity so we could get some credit under our belt, because as you do more deals and as you have more capacity, like more things unlock for you in the world of lending.
Yep.
Yeah.
Certainly.
Any final remarks? I know you got to get your message out.
I just think it's hard money can be scary. Private money can be scary because you see those rates and stuff. So just don't be afraid to pick up the phone, even if you don't plan to like use us or someone like us, and just ask them a bunch of questions. And just make sure you find someone that you feel like will actually be there when things aren't going well, or that can answer all of your questions and help you through. Because it's an interesting and intimidating process if you've never done it before.
And just play around on Excel. Like build a spreadsheet and play around with it, because 12% can sound, just any of these can sound very high. I've run all these numbers recently because I was looking at doing some new builds. So I was looking at like equity stakes versus taking like hard money versus private money, and then playing around with how long it would take me to complete the project. And like these things can vary. It really could be a lot cheaper for me to pay a higher rate with faster draws than taking a longer, lower term interest rate when I actually looked at it on an absolute level. This is one of the things to master is like the cost of the money side of it, right, Cory? Any final words? We'll go to Flint, let him have last word.
Yeah, no, I mean, just super insightful stuff, and I would agree. Like, if you don't really understand your total cash out of pocket, as we touched on before, like the returns can be that much higher. So don't necessarily be scared of the rate that shows up on the sheet.
Yeah, that's true. You were running that like crazy 7% on your Hannah. Hannah is the house that had the no foundation, the student rental. We go to that for everything because it's the example for all of it. Like Cory got stuck with some crazy high rate for a year after you got done with the hard money, right? Like the rate sucked because the terms had changed. So you had the hard money for the year, and then you rolled into a note you didn't love before you could refi back out of it. Because you had leverage. Flint, any final words for us?
Well, I just want to thank the grid team for having us, first of all. And then I would just end, someone very early on this evening mentioned the mentorship. And I just want to stress, like if I could give anyone, particularly someone who's thinking about getting into the business, the most important thing that you can do is find someone that will mentor you. And I think these two, frankly, seem like they're open to helping people in any way they can. So they're probably a good place to start if you don't know someone. But the value of finding someone that has made mistakes that you don't have to pay for, because that's what mistakes end up leading to, is money, lost money. You can find someone that has experience, and they don't have to be someone that has lots of money. Even just someone who's made a lot of mistakes, and ask them about the mistakes they've made. Don't focus on the successes that they've had. Ask them about the errors that they made and the mistakes they made.
Yeah, call us if you need one. We know a lot of
and
people.
I would say one of the reasons we're kind of intentional with who we partner with, and there's some great lenders in the room as well. Like everyone that I think in here today is people that I like and I trust, is presenting you to people who are going to share from a place of experience and try to come from contribution, right? Like, none of us want to see you struggle in the ways we've struggled. It's having the ability to like, oh, let me tell you all about the error that I made so you don't have to make it, is like alchemy. It's a way to turn, dung into gold, right? Oh, I went through this, but now this is like the most valuable thing I ever learned was what other people are doing. So thank you so much, Flint. Thank you so much, Chris,
Can
for
I
coming
say
out today.
one more
Please.
thing that we meant to say? We're just a little way for anyone in this room to make some extra money. If you refer us to anyone that does a loan, we're going to give you one of our 3 points. We just decided to do that recently. So, I mean, that's actually could be pretty good income for somebody. So, yeah.
So, and just to wrap this all up, we do a raffle for people that have tagged us on social. Highly recommend you do that. You'd be amazed how many people are watching. We've built an entire career out of just talking about investing on social media, actually. So but Lisa McNeely, you're the winner today. We got our Lend to Live book.
Yeah.
So, thank you. Next month, what are we talking about, Cory?
Yeah.
So before you go, there's 2 other events this month I want to announce. So anybody interested in Investing 101, anybody like kind of a little lost, want kind of an intensive, fantastic. So Travis Dupre, where are you? Come on down, my friend. So on April 12th, Travis Dupre, the Cajun realtor, are you gonna cook some food for us? There's gonna be some gumbo with this thing, Travis?
I think some boudin balls.
Some boudin. So Travis is gonna be teaching Investing 101 at our office at eSpaces. Got any words for the folks?
Oh, you just told them everything.
It's okay.
I think it says 5-7. You said
No,
5-7.
that's for our next meetup. Sorry.
That's next month.
Yeah, so
That's not Investing 101.
yeah, Saturday, April 12th, 10:30 to noon. It'll be at our office at eSpaces. Just trying to, we kind of go through a whole thing every year of all this stuff, but there's always new people showing up anytime during the year. So monthly, we're going to try to throw in this Investor 101 class for the new people, just to show up, maybe have a little smaller group, and just be a little more intimate and more purposeful in what we're talking about.
Yeah.
What's the address?
It's 4315. It's eSpaces, ESPACES, eSpaces on Kingston Pike. It's where Fresh Market is down in Bearden, is our office. It's in our Facebook group, and
It'll be in the follow-up to email to this.
it'll be in the follow. But we're gonna walk through like how do I have a strategy? Where am I aiming? What is that direction? All this stuff that, frankly, everyone I talk to does not have figured out. The most important part is like, where am I driving this ship? So we're going to be teaching that. So really proud to have Travis as another grid leader. Give a big hand for Travis. Yes. And then on the third Friday of every month, we got coffee, donuts, and networking right here. We're going to have Andrew Ellis with Amazing Coffee. Anybody been to one of those already? Yes, it is a good time. It is pure networking. Highly recommend you come out. And then on April 25th, for all of the agents in the room, we have Justin Ford, one of the best prospectors in the entire country, is going to be coming here. He is a coach with Glover U. Cory just got back from Glover U's conference, the Lead Up Conference. I think it's the best one in the country for leadership on the real estate side. So he's going to be coming here on April 25th to the Hilton Knoxville. So if you are a real estate agent, if you're in the real estate industry, holler at us. Like, highly recommend you check that out. What are we teaching next month, Cory?
Yeah, so next month, right, is to piggyback off of this, as Lisa mentioned, it's just going to be creative real estate investment strategies. So things like owner financing subject to lease options. These are going to be things we're going to be diving into at that meeting.
Thanks for coming out. We appreciate y'all.
Thanks, y'all.